Hi there, welcome to Grain TV. It's Thursday, July 21st. There was more green on the board than red, but it sure didn't feel like much of a rally. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, front month August beans closing up 7, while new crop November up 4. Chicago wheat up 4, and old crop corn in Chicago was off 4. There wasn't really, again, much to grab our hats to move the market one way or another. The weather forecast continues to be favorable. We have this heat spell that's going on, but it's going to be short-lived right now. Probably by the end of the weekend, it'll turn cooler according to the weather models, and most of the rest of next week looks to be normal to below normal temperatures with pretty good chances of rain, especially in the northern plains and Midwest. There will be some potential for heat to return into the later part of the weekend, but overall, the market has taken these weather models this week and said this is a crop that's really going to be big. We have really good crop conditions. We have weather that looks favorable for the last half of July, and so the market has really punished to the downside, although we may be losing some speed here or losing some steam here as we go into the weekend. Other news out today, Argentina's official crop forecasting agency bumped up their corn and soy forecast for 2015. On soybeans, they peg it at 58.8 versus their previous forecast of 58 million metric tons, and corn was up to 29.8 million metric tons versus 27.9. Other news out, the export sales report this morning was not really that exciting. Certainly in the case of corn, it was pretty negative. In fact, remember yesterday we talked about a combined old crop, new crop sales that needed to be around 1 million metric tons. Instead, we got somewhere around 840 metric tons or 840,000 metric tons for old crop, new crop combined. If we look at the breakdown, only 345,000 in old crop. That's below expectations of 400 to 600,000. And new crop was a disappointing 506, although still within expectations. But when you consider the fact that we are going to need to move a lot of corn in the new crop marketing year, that's very disappointing in my opinion. On soybeans, low end of expectations on old crop at 325. New crop was positive, coming in at 1 million metric tons. And when we finished the morning trade here going into the break, we were 10 cents higher on new crop November, but those gains quickly eroded as we got into the full day session. And so overall, the market continues to sort of discount any sort of export news right now at this time of year, looking instead at the weather maps that show pretty favorable growing conditions. In wheat, 478 was the export number for wheat, well within analyst expectations of 350 to 550 on the board. Let's take a look at November beans, because we've had a punishing downslide here since we briefly got up almost to the $12 mark. Remember, this rally started taking shape in March. Around March 1st, we started to launch thanks to the weather problems in South America, and we quickly climbed higher, having one of the best bull runs in the history of soybeans. But things are looking pretty dismal now as we break down below some fairly long-term trend lines off of that March 1 low. Keep in mind, we may get a pullback here as we go into Friday. Friday will be, of course, the end of the week, and some traders may decide to take some profits off the table here, especially with a long, potentially hot weekend coming down the pipe. So if you're a farmer and you're looking to maybe price some grain here because you've missed some of this rally, I think 1040 might be a potential test as we maybe move up to that uptrend line around 1040. But other than that, I think this is a market that seems pretty poised to be moving lower into fall. So if you haven't done much forward contracting, you haven't done much pricing, it may be time to get serious about this because the train may be leaving the station. That's all we got for today on Grain TV. As always, if you'd like to learn how we can help you in your own grain marketing situation, visit us online at grainhedge.com. As a Grain Edge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.